Great Dividend stock making new 52-week highs. Steel Dynamics, ticker STLD. Based in Fort Wayne, Indiana, Steel Dynamics Incorporated is among the leading steel producers and metal recyclers in the United States. It has a steelmaking and coating capacity of more than 11 million tons. It is one of the most diversified steel companies in the United States, with a vast range of specialty products. The company makes and markets steel products, processes and sells recycled ferrous and nonferrous metals, and fabricates and sells steel joist and decking products in the United States and internationally. Steel Dynamics operates through three segments: Steel Operations, 72% of revenues in 2021, Metals Recycling Operations, 12%, and Steel Fabrication Operations, 10%. Other operations, which include subsidiary operations, accounted for the balance of revenues in 2021. Steel Operations, the unit produces steel from ferrous scrap and scrap substitutes and consists of 6 electric arc furnace steel mills. It mainly consists of steelmaking and coating operations. Metals Recycling Operations, the division's operations include ferrous and non-ferrous scrap metal processing, transportation, marketing, and brokerage services. Steel Fabrication Operations, the unit produces steel building components, including steel joists, rafters, trusses, and decking. The division's primary customers are non-residential steel fabricators. Steel Dynamics, in 2018, acquired Heartland Steel Processing, LLC from CSN Steel for $400 million. Heartland produces a range of higher margin, flat roll steel by further processing hot roll coils into a cold roll, pickle, oil, and galvanized products. It can produce 1 million tons of cold roll steel annually. Reasons to buy. Point 1. Steel Dynamics' customer-focused approach, market diversification, and low-cost operating platforms position the company for future growth opportunities. The company should benefit from its investments to improve capacity and upgrade facilities. Its $100 million investment in the new paint line at Columbus Flat Roll Division provided 250,000 tons of annual coating capability into some of Steel Dynamics' high-margin products. The Columbus expansion will enable the company to manufacture double-width steel and sell in the southeastern markets, including Mexico. Point 2. The company should benefit from its strategic acquisitions. The acquisition of Heartland is expected to increase Steel Dynamics' total shipping capability and annual flat roll steel shipping capacity between 8.4 million to 12.4 million tons, respectively. The additional exposure to lighter gauge and greater width flat roll steel offerings will also expand its portfolio of value-added products, strengthening Steel Dynamics' position as a leading steel producer in North America. The company expects annual synergies related to Heartland in the range of $10 to $15 million. The buyout of Severstal Columbus has also expanded Steel Dynamics' yearly steel shipping capacity and provided the company with geographic diversification and exposure to the high-growth oil country tubular goods and automotive markets. Point 3. Steel Dynamics is also executing several projects that should increase capacity and boost profitability. Notably, it is investing around $1.9 billion to build a new flat roll steel mill in Sinton, Texas, that is expected to have a production capacity of roughly 3 million tons per year. It will be able to make the latest generation of advanced high-strength steel products. The company expects this investment to allow it to cost-effectively serve the customers in this growing flat roll steel consuming region and enhance its steelmaking capacity and value-added product capability. Moreover, the company believes the project will create long-term value through its value-added products and geographic diversification. Point 4. The company is poised to benefit from strong cash flow generation and the execution of its long-term strategy. It generated a record cash flow from operations of $2.2 billion in 2021. The company also ended third quarter 2022 with record liquidity of around $3.2 billion, including roughly $1.4 billion cash. Also, Steel Dynamics' long-term debt was about $3 billion at the end of the third quarter, while its short-term debt was around $23 million. Reasons to sell. Point 1. The company's steel operations face challenges from higher steel raw material costs. The Russia-Ukraine conflict has disrupted the supply of pig iron, a primary raw material. Higher steel raw material costs will likely put pressure on margins in this unit over the near term. The steel fabrication unit also faces headwinds from higher scrap input costs, partly due to tight supply. Point 2. Production disruptions due to the ongoing semiconductor shortage are also expected to impact demand in the automotive space over the near term. The semiconductor shortage has reduced automotive production worldwide, causing a steel demand slowdown. The Russia-Ukraine conflict has aggravated the global microchip shortage further. Both countries are major suppliers of raw materials required for global semiconductor production. The semiconductor crunch was expected to ease in the second half of 2022, but the conflict has threatened to extend the shortage to well into 2023. Point 3. The recent sharp correction in steel prices partly due to weaker demand is a concern. After surging to nearly $1,500 per short ton in April 2022, the benchmark hot-rolled coil, HRC, prices are downward. HRC prices have fallen below the $700 per short ton level. The downward drift partly reflects shorter lead times. Fears of a recession and slowdown in China due to new coronavirus restrictions have dwindled steel demand. Point 4. The steel industry is still reeling under sustained overcapacity. China, which accounts for over half of the global steel output, is a significant contributor to global steel excess capacity. China's steel output clocked 1.03 billion tons in 2021. High steel output in China led to high levels of finished steel inventories. The steel glut ignited concerns about China flooding global markets with cheap steel exports. Notwithstanding Beijing's actions to control production to reduce carbon emissions, production in China is likely to remain at high levels, aided by higher domestic steel prices, healthy demand, and strong profit margins. Completing the mandatory steel output cut requirements by steel mills to combat pollution will also lead to an uptick in production. Last earnings report: Steel Dynamics earnings and sales top estimates in Q3. Steel Dynamics logged a net income of $914.3 million or $5.03 per share in third quarter 2022 compared with $990.8 million or $4.85 in the year-ago quarter. Barring one-time items, adjusted earnings per share came in at $5.46, topping the consensus estimate of $4.97. Net sales increased roughly 11% yearly to a record $5.65 billion. The figure beat the consensus estimate of $5.47 billion. Valuation: over the past 5 years, the stock has traded as high as 11.3 times and as low as 2.1 times, with a 5-year median of 5.44 times. A neutral recommendation indicates that the stock will perform in line with the market. The current price reflects roughly 11.07 times forward 12-month earnings per share. Let's now look at what retail analysts are saying about Steel Dynamics. Looking at Zacks Research, they rank it a number 1, strong buy with an overall VGM score of A. Moving on to the daily stock chart, we see a breakout above the top resistance level at $100. We topped out at the $113 level before a solid pullback to the mid-90s at $95. We are now flirting with the previous highs. When recording this video, we seem to see a slight sell-off. I'm waiting for a base to form, thinking we may see buying in the mid-90s again if we can hold this level, possibly after their subsequent earnings, which should be in a few weeks, on January 24th. The last EPS surprise was 9.9%. On December 15, 2022, Steel Dynamics announced its earnings guidance for fourth quarter 2022 in the range of $3.34 to $3.38 per share. The company's guidance for adjusted earnings is pegged in the $4.10 to $4.14 per share. The company's third quarter 2022 earnings and adjusted earnings were $5.03 and $5.46 per share, respectively. Earnings and adjusted earnings in the prior year quarter were $5.49 and $5.78 per share, respectively. If we can hold the $95 area, we may see another breakout to $124. This would be a nice 30% run from the baseline. Let's move on to tip ranks and get a second opinion. Tip rank scored a 5, with a moderate buy. Based on 5 Wall Street analysts offering 12-month price targets for Steel Dynamics in the last 3 months, the average price target is $102.80, with a high forecast of $121 and a low forecast of $85. The average price target represents a -6% change from the last price of $109.36. Steel Dynamics' market cap is currently $19.3 billion. The company's EPS trailing 12 months is $22.60, its PE ratio is 4.85, and it has a dividend yield of 1.27%. Last quarter, Q3 2022, Steel Dynamics' total revenue was $5.65 billion, an increase of 11.07% from the same quarter the previous year. In Q3, Steel Dynamics' net income was $914.3 million. Steel Dynamics' total assets for Q3 2022 were $14.05 billion, an increase of 2.45% from the previous quarter. Their total liabilities were $6.1 billion for the fiscal quarter, a -0.81% decrease from the last quarter. Their free cash flow for Q3 2022 was $1.25 billion. For the 2022 fiscal year, their free cash flow decreased by $1.4 billion, and operating cash flow was $1.5 billion. Steel Dynamics has a 1.27% forward dividend yield. The last ex-dividend date was December 28, which was paid on January 12. The payout ratio is 5.67%, which is sustainable. Let's plug these numbers into the dividend calculator. At a share price of $109.36, we'll buy 100 shares, making a total investment of $10,936. With an expected dividend yield of 1.27% and the dividends paid quarterly, we'll reinvest the dividends in the DRIP strategy. We'll let it sit for the next 10 years, not adding anything to our position. We'll keep it, not expecting any share gain or loss. After 10 years, our ending balance is $12,416.90, a 13.5% total return. Let's see what we get with a 5% annual share price increase, with a similar payout ratio of roughly 5.5% of profits. With the same original investment and expecting a 5% increase in the share price, after 10 years, we have an ending balance of $20,104.60, a total return of 83.84%, averaging an annual return of 8.38%. This is the power of compound interest with stocks. Their dividend rate is lower than the sector average of 1.8%. Looking at news and insights, their news score is very positive, with Bank of America giving Steel Dynamics a buy rating and a price target of $121. Looking at insider trading, corporate insiders sold shares worth $2.4 million in the last 3 months, giving it a negative confidence signal. Moving on to investor analysis, the average age of shareholders is between 35 and 55. Hedge funds decreased holdings by 252.2 thousand shares last quarter and missed this massive breakout to the upside. Comparing results against similar stocks, Steel Dynamics has seen a 78.31% gain over the last year compared to its competitors. This is the video section I mentioned earlier. If you want to look at other similar stocks in the same category, we have tickers NUE, RS, CLF, and ticker X. Steel Dynamics' blogger sentiment based on 11 blogger opinions is more bullish than other stocks in the basic materials sector. Public companies must disclose risks affecting the business and the stock. These disclosures are known as risk factors. Companies disclose these risks in their yearly and quarterly earnings reports. Risk factors show the challenges a company faces. Investors can consider the worst-case scenarios before investing. Steel Dynamics disclosed 17 risk factors in its most recent earnings report. Steel Dynamics reported the most risks in the legal and regulatory category. Bottom line, Steel Dynamics stated that customer order entry activity remains healthy across its businesses. It sees seasonally moderated volume in steel and metals recycling operations in the coming months. Its order activity and backlog remain strong, notwithstanding softer flat-rolled steel pricing. The company expects steel consumption in North America to remain steady. It also anticipates demand for lower carbon, U.S.-produced steel products, and lower imports to support steel pricing. Moreover, the order backlog in its steel fabrication operations remains historically high based on volume and forward pricing levels. If you've made it this far, thank you. Let me know your thoughts on this pick and the overall sector in the comments. If you haven't already, please hit that like button. Peace.